Okay, ladies and gentlemen, then let's start with today's session. We will talk about, or we continue what we started yesterday, and we have a little bit more theory today, and I hope we can then switch to strategy. And if it doesn't work today, I promise you will latest talk tomorrow about the strategy, because this is the main part, and you will see the really fantastic approach how you can even see the markets, and not you can even, but how you can see the markets and how you can trade it. I promise you that. So I ask you, be a little bit patient. Just let's go through the theory and that what I've compiled here in this documentation, and then we will come to the strategies. You will see how exciting and how maybe unbelievable even this strategy approach is. So first of all, welcome. We have yes, not everyone aboard so far. Hi Argo, great to have you here. Christoph is here. Ed, Frank, Karen, Chiara, hi, welcome. And Karen is here. Chiara Levy, yes, great to have you here. Myron, you have a micro as well. Raimo, hey, welcome. RG Robert, hi. Robert, we have two Roberts here. Srini, Tom, Yulas, Eve, welcome. Good morning, good afternoon. Hi, what would we need to set up on Bookmap to follow with the strategy? I will show you that. That's really, maybe you will be speechless when we talk about it. Maybe you will be speechless. That's my goal, to make you speechless, because you will not need much to set up everything we are talking here about, we are discussing here about. And anyway, if you have any issues or whatever, I can help you. Levi is a good friend, and I'm really happy to help him every time. So we are using TeamViewer. Every one of you who wants or needs a help or a hand, I have a TeamViewer license here, so I recommend for everyone download TeamViewer. It's on teamviewer.com. It's a free version. You can run it. You don't need to install it. Then the TeamViewer will give you an ID. That's a number and password, and then I can access your PC. I can set everything up in really whatever it means in a few minutes, even seconds, if it's only the configuration file. Yes, you can download it. It's really easy to do that. So once you have TeamViewer, there's for sure other services as well. But as mentioned, I have the license for the TeamViewer here and for the business, and you can download it for free, and we can simply use it. Okay, that's but yeah, that's not only for seminar members here, it's for everyone who is using TradeFind and Bookmap. I will help him to set up Bookmap that way, the way it should work and it should be. Okay, great, guys, ladies and gentlemen, let's start with a recap. Let's start with a recap. And please, your microphones, don't be shy. We are here in a separate, closed virtual room. We can talk about everything, so don't be shy, and please, your microphone. It makes my life a little bit easier, because how to say, it's a little bit of stress and pressure on myself, on my shoulder, guiding you through this seminar and proving what I'm saying, what I'm showing here. But anyway, one point. I woke up this night. I couldn't sleep because of you, of course. No, I'm kidding. I'm just kidding. I'm just kidding. Okay, no. I woke up because one question yesterday bothered me a lot. And that was a question. It wasn't a question. I don't know who it was, but I remember we had a discussion with Argo. Excuse me, with Ramo. And the question was, let me go. Can you see my screen, by the way? Do you see my book map? Can you see?
Yes.
Okay. Just, you can hear me, you can see my screen. Okay, great. The question was, let me go back, find this, price level. Yeah, okay. I think that was this, it was that area, or maybe it even it is. And the question was, how do we know? Let me remember. I think the question was, do we have any signals or signs here which could predict this move down? Or my understanding was and is, do we have signals? Which position, either short or long, should we take here at the, let me say, 84, 85 level? That was the question, and I felt the answer in myself. It was on the tip on my tongue, but I couldn't express it. And I woke up this night and I've got an answer, because you remember, Ramo, we talked about the NQ and the stop run into, I don't know where it was, somewhere here. Oh yeah, it was here. I think that was the situation here at 5:34 p.m. my time. That means it's 11:34 Eastern time. And yes, we had the discussion about stop runs here. It was a sweep so far, I know. And the question was, do we know that this might be a short position here? We don't know for sure that we can't predict, or we can't foreshadow this this down move here. That's impossible, because we talked about yeah. Let's move this the heat map here to the right. So that's the situation. Why we can't know what happens the next. We talked about the sweep into this 83 area, then we talked about liquidity. But I will show you another reason why that was on 100% sell. Let me exaggerate a little bit, but I insist to say that was on 100%. We got from the market, in time, and signal that this was most probably a sell here at this point. So I will keep up the tension here in the room, and the tension amongst you is, and please wait until we come to that. I will remember, and I will show you my arguments besides the liquidity here, and besides the stop run here, and that what happens in NQ, why it was more important to watch another signal to understand why that was a short. By the way, if we are short, we understand the signals. Where I will try to show, or I will not try, but I will show you everything what happens when we are in the market. It's simply not in our hand. We are at the mercy of the market when that happens. We can only control our risk. We can only control our trade. We can only control what we are doing when we are in the market. We don't know that the market dropped down for 82, 14 points, 14, 15 points. We can't predict that. We don't know. We can't foresee the future. It's not possible. Everything we are talking here is hindsight. But we do know there was a sweep, there was liquidity, and I will show you an extremely powerful signal why that was a short here. Okay, that's the point. I just wanted to get rid of it, to put to tell you this idea and to get this idea out of my chest, just to be sure. And you, if I don't believe I will forget, but in case I forget, please remind me that I want to talk about yesterday's signal and this discussion here in the room. Okay, great. What I would like just to discuss with you very briefly is what we discussed yesterday based on liquidity, and I would like you to use your microphones to express what do you see, what might be the probable trade idea for the ES at the moment. We will see a stock, we will see we will have a look at Apple, and because that's not only a future seminar, that's also as well stock seminar. If you trading stocks, either options or direct, I don't know, the principles are the same. So what is the most probable outcome when you see this picture here? That's the ES at the moment.
A lot of liquidity at 95.
Yes, and what else?
And it's 700, so second layer.
Yes. Given you have historical data, I hope so. I have historical data, and what I'm recording and what the gap. So what I'm recording is used for, is taken from the storage from disk here, on my PC, and if something is missing, it comes from the X feed. You can subscribe to, I think, 24 hours of historical data based by the DX feed. That means if you are missing the data here yesterday, the data will be simply filled or added by the X feed here. If you don't have, if you only have normal data when you start PC or Bookmap, then it starts to record every data string here. So the important part here, what I wanted to say is simply watch this. 95, they cancelled 195 and added 300 to 4700. That's impressive, really. There was one guy, or let me say, yeah, let's talk about one guy. Ladies, excuse me. I mean, we can also talk about cheat. There was a lady, he added 95 and then cancelled that at that time and lifted from 95 to 4700 here, to 4700. And then added again here. You'll see how they are adding 70, 180 plus 100 plus 60. There was an intentional add to 97, but keep in mind this 4700 is in the book, is still in the book. And now the question is, will the market trade against 95 and 4700? What do you think? Any opinions? If liquidity is a magnet, if liquidity is yes, attractive for the market, will the market trade 95, 4700?
Maybe could wait to see confirmation of like a flush to the downside first.
This one?
Yeah.
Yeah. Yeah, the question is, most probably, if this liquidity remains in the book. Now look here, what happens? What happens here? Guys, watch this one here. What happens at 95?
Cancelled.
Yes. It was cancelled. Minus 180. That happened right now when we start the discussion here. But we have two poles. Let me say we have two sides of the market right now. We have the 67, which is as well an institution level at 67. And we have these, yes, we have the added at 67. This institution level, by the way, have been in the book, or I reported them today in half hour. Yes, just let me think, 8:30 Eastern time. That means 1 hour before the open.
I'm sorry. When you speak like institutional levels, is that spot gamma levels or?
No, that's it's my excuse me. I see it right now. I've added
I
them.
mean, you posted into this what was
Discord
it
room?
called? Yeah, Discord room.
Yeah. Yeah, I'm posting them on Twitter, but I don't have simply the time to do that every day. I'm posting them on in the Discord room very regularly. Who was it, Jonas? I think you asked. No, the spot. I have the spot gamma level as well. So I'm following Brent since more than 1 year. I have helped them to get into Bookmap and to set everything up here. So he was introduced by myself to Bookmap the first time, and then he is providing the spot gamma levels for Bookmap and for what else? NinjaTrader, I think, and for other programs as well. For InQ and Russell, I think. What I have here, I have, let me say, some friends which are working for a big institution, and since we as kind of associates or friends, they just copy me every day what they might expect in the market. This institute, what I can say is simply I don't have any influence on these levels here. They are based on options and other market calculations. I don't know, even don't know, and I wouldn't speak if I know what they are doing, and they are extremely reliable. We will come in the strategy section about and we'll talk a little bit about the institutional level. They are there, they are given. You can use them, they are for free. You can watch them, you can disregard them, whatever. So I'm just posting them, I'm just sharing this institutional level, but they are as well based on options as well. Yes, that's true.
How do we configure those columns?
That's quite easy. I can post the cloud notes here. It's a voluntary service from our room at Chuck, which is a room member, is now putting them in the cloud notes. The link is here. You can use it. It's free. And add it simply to your chart if you want. If not, it's up to you. What I have here is the daily levels. I'm just using based on my NinjaTrader. So what was the high? What was the pre-high, pre-low? What was yesterday's close and pivot point and VWAP and so on. That's simply just for information. I'm not trading that, just to keep in mind what happens. So the call and the third column, SG, means spot gamma. That's what spot gamma, what Brent is offering, and for subscription here on the spot gamma level. So that's the point. Okay, but I just wanted to do a recap, ladies and gentlemen. That was my intention. So based on liquidity, you see what happens here. First impression is, as I think it was Julius said, that we have 4,700 and 95. And suddenly when we spoke about that, 95 was killed. Or not killed, but cancelled in this case. And look here, what was the next? What's happening at 85?
Yeah, they added. So I think it's going to go up.
Yeah,
Because
but we have still the 67 in. It's still there, 100. So at the moment, I think the best answer at the moment is we see this huge magnet at 4,700, right? We see this huge magnet at 4,700. And we see that 95 was cancelled. So there's a probability that the market will trade at or into 4,700 or into 4,700. It's possible, but don't be surprised if they drop down and then this 4,700 remains in the book the next days, and they need more, maybe 1 week or 2 weeks to finally trade into 4,700. But that's the first impression when you open the chart. Excuse me. When you open the chart, you see in a blink what is right now. What is the game? What is the game? What's on the chessboard here? what is really on the chessboard. And they cancelled here. They're offering at 85 and they're bidding at 66 or so, or something like that. This area here. And by the way, guys, Levi, if you're around and you're listening, just to answer your question, what is the price alert? We added this price alert simply because adding graphicals and lines and rectangles using Bookmap drawing tools is a little bit, let me say, cumbersome. It's a little bit shaky. So we added the price alert. You can, it's simply an alert function. You say enable, you can put a label at, what was it? 4667, I think. This is the label, and then you just add the price, 4667, and you see here line is added with a label. You can define yourself whatever you want, and when the price hits 67, an alert or notification, if you are using Telegram, will be sent to your Telegram mobile, Telegram either desktop or mobile, and a sound will be played here on your PC or laptop, whatever you have, and alerts you, okay, this level was hit at 67, and then this institution or this label will be crossed and indicates, okay, that level was hit at that point. That's the Levi. That's really easy. Price alert, add a new line, define the label and the price, enable the alert if you want to hear or see the alert, and then that's it. But at the end of the day or next day, they remain on the chart just for control functions. Remove all, and then all lines will be removed or deleted. So you start from scratch here with concerning the lines here. If you have questions, we can discuss it, of course, via TeamViewer again. Okay, great. So that's the first impression we see on the ES, in the ES future. Good. I would like to come back to this situation here. You are starting now. It's 8:30. I think there have been some news. I haven't had the time to watch them. What might this price dynamics plot what is price dynamics plot indicating here? What are these diamonds? This big. I don't know. I don't have a word for them, so I'm sorry for that. Yes, go ahead. What does this big bullets of diamonds here indicate?
Sellers.
Sorry?
The red one indicates seller in control.
That one?
But that's a kind of exhaustion.
Yes, that's right. Exhaustion, exactly. You see these big bullets, then you see, okay, they start to buy again. There are more buyers than sellers. It is a really good opportunity to go long here, although we don't know when aggressors are hitting the market. So if you are long here, yes, you have to manage your trade as well as here. You see that as well for those of you who has an SI indicator, and I'm using this VDelta stop run indicator. It's nearly the same as the SI indicator and indicates a nice stop run. I don't have a flag here because that's pre-market. I have set my settings higher than the pre-market is. You see the pre-market volume was at that point 200. 320 at the moment. 320 here. It was, it was a little bit higher here. So 500 after the announcement. Pre-announcement was extremely low, 115 market volume, and it jumped up along when their yes, announcement was dropped back to 99. But this gives you an extreme nice idea what the market, where the exhaustion might be. Be very cautious to go short here. We're very cautious. The market, of course, can go short, but most of the time you will realize and you will notice that the market will take a break here because there are no more sellers. They need to find more sellers. At that point here, at 8:34 Eastern Time, you see the buyers came back in. That's a valid long position here, 80. Then they started, exhausted a little bit, and then started back. So that was another exhaustion. And the buyers came back in here. Yeah. Here. It was good for 77, 78, maybe 80, not much, but anyway, it shouldn't be a loser here. And then they're starting back to hit the market here. More sellers into the bids. Exhaustion here at that point. But that's always the same game, you know. Watch for, oh yeah, we have the open, therefore everything is relative to the to the previous market. So we see very, very hard open, hard selling first, and then hard buying. Buyers came back here, and that was, I didn't notice that. Where was the, I think it was 80, 81 where the liquidity was, and you see how the market is trading against the liquidity here, even supported by the buyers on this side. So that's the picture we are just seeing here. Very clear. We have 4700. 95 was cancelled, but is coming back a little bit. We have 85 here. It's adding. And we have, what is this, 80 here. I don't know whether 80, let me add an level here. Was it 80? I'm not sure what it was, so okay. And the market traded straight up into the liquidity. So you have two visualization now on your chart where you don't need to guess. You can even, and that's my favorite, what I'm trying, but most we will talk about that. You even don't need the subchart because everything is here. You see the supportive icebergs here. We'll talk in a few minutes about icebergs, and they are just coming back and hitting. I'm sure you will see on your SI tracker icebergs on ask here, but anyway, it doesn't matter what icebergs you have here. The market is going straight up here. So we will have a hopefully interesting discussion based on icebergs a little bit later. Coming to rest, and then aggressors come back, and they are trying to lure in this the price here or trade the price into 88, 89, and then maybe higher. But what I wanted to say, what we have discussed at the beginning, you are right. The first impression is the market is bullish. The market is bullish. There's nothing on the downside here. There's nothing on the downside. Nothing visible. We have some interesting though. We have at 30. We have liquidity here. Watch here. We have these institutions levels, which are options. We have zero gamma. We have volatility trigger if you're looking at spot gamma here, and around 30, 35. There is liquidity there, but it's now relatively weak in comparison to the liquidity which we have to the upside. Bullish. It's absolutely bullish. You can't miss that. Even if you don't have any subchart, it's a very clean and concise and precise picture of the market if you're trading ES. So for those of you who are using trading stocks, I would like kindly to ask to comment What is our impression of Apple right now? How would you try? Yeah, go ahead.
It'll go to 182. Sorry,
Apple?
152. Yeah, so the top liquidity.
I
no,
understood
no.
180, 150, 155, you think? Yeah.
No, it's 152.
Okay. Yeah. Okay, got it. Yeah.
I think 155 as there's a POC.
Yeah, that POC is here, but
I mean, if the price goes up, there will be new
I'm not sure.
POC.
Yeah. But the first impression is, guys, we have to watch for long. So if you are trading Apple, that means if you're trading options and you're taking the premium, then you have to buy a call. The question is now where to buy the call. If you are simply trading options or stocks with options, you are out for the premium. You have to buy a call for Apple. So what probably at this double bottom at 49.70, 90, and it gives you back a few cents. So you are not in a losing position. The interesting point though is if you are using Trade Finder, you will see the high volume. You see what it's traded, 20,000 in the markets, on the market side right now. On the average liquidity from the first 10, that's a little bit too short. The 10 means 10 cents in Apple. I would like to increase that to at least 50 cents because a tick in the stock, a tick in the stock is a 1 cent. And let's measure 20 seconds of the price. So we have to find the best settings for an instrumental. So we are measuring the 50 levels, so 50 cent around the best bid offer. And that means we are currently trading 1,200 to 200 on each liquidity side in average, and the market volume is at the moment 50,000, 80,000 is increasing here.
Walter.
Yeah.
Yes, one question in between. But can you go back to the ES at the moment? Because that's a situation that I also see a lot. And there you see there's a lot of liquidity above and below. It's pretty much the same. There's a bit more above. And what do you make from situations like this? Where do you look at to estimate where it will go? Because it's in a very tight range, only a few points. Yeah.
In this situation, to be very open, in this situation I'm doing nothing because I don't know what they are doing, what they are claiming. I would like to see, look here, liquidity is coming up. It means it could be a pressure to the upside. It means resistance. And look here, 50 are added at 77. So in this situation like that, I don't know anything. I will show you in few moments what the market is doing or will do, and then I will decide what to do based on the overall market. But at that situation, I'm doing nothing. Either I'm long here, and then I have to trail my stop. That's the one outcome. I would have been long here today because it's everything cries long here, and the market simply drops here. But at the moment when you spoke, Remo, it wasn't clear to me what to do here. So I'm not sure. Either you are long from the beginning on, then you have to manage your stops, or if you're not long and waiting, then wait for a signal. So I have a volume spike here. Maybe you have a stop run on your chart, most probably here in this area. That means that it's a kind of exhaustion. That means they need to find more buyers to lift the offer. And in this case, that can be a sign. It's supported by the price dynamics, and then you see immediately the sellers are in control here at that point. That means if you are
And
going
you
long.
stop order
So-
by 104.
Okay. Yeah.
Yeah, well, actually, while we're at it, there's a really nice thing to see at the chart that I'm looking at. Let me just share it now. Here we go. This one. Okay. There's this one. I need to see the chat. Let's chat, yeah, here. Okay. If you look at this one, and I'm wondering if you see the same on with your indicators, because you see some really big icebergs just before it's going up big time, and
Yeah.
and it's also being combined with a stop run.
So the iceberg, what that means? What means that? You see the iceberg. You have an iceberg of 253, I suppose here.
No. It's on the subchart. Do you see?
Okay. Understood. Yes, we see the same.
Yeah.
We see the same. We see the same icebergs here. You have the same icebergs here. I can reduce them. To. Let me see. Let me have a look on the hidden orders here. It takes time.
Yes. Because if you look at the chart that I have, it's very clear. You see a very clear stop run. You see a very clear iceberg. Yeah.
Yes, we have the icebergs here. I think them are really nearly the same as you have. And then I see a stop run into here and the next one into 89.
Yeah. Okay.
So here.
Yeah.
The point is, I mean, you can use this chart as you have learned from my colleagues here, but I don't know if this is really a sign of in other question. What do you wanted to do with that? Would you like to go long or short, or what's the indication? Raymond.
Well, in this case, if there is a big buy iceberg, of course, then you want to go with the flow and buy as well. And if they have a sell stop run, well, you on the stop runs you counteract. So if there's a big buy, then you sell, but not immediately. In this case, for example, when you see a red bubble coming up, those are some things that I saw that actually work. So.
Oh yes, the stop run.
Yeah.
Excuse me. The stop run was at. I see that right now. Let me see that. The stop run. The first one was at 5 and at the beginning. Here, at the beginning.
Yeah.
At the beginning. Yeah, here. I don't know. I'm very, very cautious with that. So if you want to trade if this is a stop run, might be, I'm not sure. I don't want to argue with that. It was a look here. If you want to see if this is a stop run, and that's Reimer, what I'm trying to tell everyone who is using the SI tracker, and what you have here is simply aggregated data. It's simply aggregated data. You can use, of course, this information for you, but I will show you another situation where you know that the market is going up and not watching this stop runs. Do you a favor. I think it's best to do you a favor and zoom in and see if this is really a stop run. Zoom in.
Okay.
So. I'm very cautious with it. When you zoom in, or when you look very, very close into this the price development, you see that the stop run should be a little bit different. We will talk about sweeps as stop runs as well. I'm very cautious with that. So if it works for you, then use it, and then that's really great. but I need a little bit more evidence. Let's see what happens here. So we have had a stop run here. No, here, excuse me. Yeah, that's a question. I have a different understanding of stop runs than my colleagues at Bookmap have or has.
So can I understand it correctly? Then the stop run will be like that bid-ask spread will be much wider than it used to be in normal way.
When we talk about stop runs, what are stop runs? Stop runs are algo-driven mechanism which intends to take the stops of retail traders. That means when a stop run happens, the intention of the stop run is to trigger the stops and to accelerate the counter move. When a stop is excuse me, I have to reduce the hidden orders here. When a stop is hit, I don't want to see any smaller icebergs here. When a stop is hit, then it is a fast move. It triggers the stops, and then this acceleration, the energy of triggering stop, is used to accelerate a counter move. I will try to show you that with sweeps or with another picture I have to find. Another picture I have to find, or screenshot I have to find, what I think is the best explanation for stop runs. Give me time to find what I mean, but I don't believe, and that's I don't want to hurt you, Raimo, and I don't want to offend any one of you here, but I don't think the colleagues at Bookmap a little bit of what it means to understand what a stop run is. So I just don't want to, to hurt anyone with that, because if you believe that's a stop run, that's okay. I'm fine with that. No, I'm fine with that. It's okay, but I believe that a stop run, and what I have learned and what you can read in the literature, is that a stop run is an maybe a little bit more stronger move than this volume spike here. It's really a strong move up, a very fast move to catch the stops, and then it accelerates the move to the downside or to the upside. Prove me wrong. If I'm wrong, I'm really happy to learn from you here, but I don't believe that this, what we see on this chart here, if we if we look at this aggregated data, look here how this data are aggregated, and you see a stop run, and then you zoom in. So from my point of view, that's by no means a stop run. That's simply an high volume absorption at bid at 75. That's only, we are talking about 76.25 and 76 even here. We are talking about a quarter. 25 point, yes, we are talking about a quarter here. And when you zoom out, that might seems to be a spike, but it is not a spike. It's simply trading. It's simply, they started at 9:30 Eastern time and then simply traded up. So this aggregation of Bookmap might lead to wrong or to different views of the market. And therefore, Raimo, I'm sorry, but I'm not convinced about what the SI tracker is indicating here. I'm not convinced about that. I wasn't never convinced about that, but it's we are free to do whatever, or to think whatever we want, and therefore I believe that simply the open, they traded extreme high volume here. They traded extreme high volume. The imbalances were to the upside, indicated by this triangle here, and everything was crying bullish, bullish, buy, 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 buy. So into 795, 4700, whatever. It was bullish, and I will prove that. I will prove that in maybe today, but latest tomorrow, and I will show you how you can rely that this is a long trade. You will see that. Maybe you will won't believe it, but I'm sure you will believe that. So we have this volume spike that was maybe as well an stop run on your chart, Rhyme. I'm not sure if that was a stop run as well on your chart. So the question is, if that was a stop run, then you have to sell, from my point of understanding. Yeah, but you see what happens here. We have an iceberg 200 hitting. We have an iceberg 150 on ask. That means according, yeah, we will talk about icebergs a little bit later. Guys, prove me wrong. If you think I'm wrong, I'm totally open. But we did a lot of research about the stop runs and that what the SI tracker is trying to tell us. I know that I worked with Sergey on the MVP here, what's below here. It's very similar to the stop run mechanism of the SI tracker here, this MVP. Very similar. And I know that we have a little bit different opinions and discussions based on that, but that's okay, that's fine. Just to go forward with my recap. Apple, the first intention was to buy into 51 because the liquidity is there. And then the picture turned a little bit. When you see this absolute liquidity at 150.20 here, then that means this is a resistance. This is a resistance area here. If you are trading stocks. And then to the downside, we have as well good targets at 148.50, 148 even. So today it's really hard, maybe for some of you, if you are long and take this as a double bottom because you see the liquidity is up at 158, you have to go long or to buy a call here. And when you see the liquidity is cancelled, 150 and 60 cents here, then that might be a warning sign to tighten your stops or to take profits here, whatever, because we have two poles here to the downside, 148 and 150.51 here. So it's really not clear what a market or what Apple will do at the moment. We have no good signs or signals of the market. You have synthetical icebergs here. You have synthetic icebergs as well here. So it's not, the picture is not clear. We have more resistance on 150.20 here, and I'm not sure what I would like to do here. If not, and I remember, I'm not sure if Jay is around. He posted a nice tweet that the most hardest point is to wait. If the picture is not clear to you, simply wait. Don't do anything, wait. NQ as well. It's a little bit late for NQ. NQ is a little bit more, yeah, I don't like NQ because you see at this extreme low liquidity here, 910, that's really low, but it was a buy from the beginning on here into 16,000 here. So then we have a lot of buy sweeps, maybe a little bit too much. I have to adjust them. Let me say I have to adjust them. To see if there's something meaningful. I'm played around with some different settings here. Let's see, there's calculating. Yeah, I think we must raise the sweeps for the NQ a little bit higher to 150, 200, and then you got meaningful signals. You see, you start to pick the sweep, the swing highs here. You're starting to pick the swing highs, and that's what we want to see: liquidity and swing highs, which are supported by sweeps and volume spike. That means big volume. Big volume is all the time exhaustion. Big volume is all the time exhaustion, and that means volume spike and sweeps. We will talk about that. Can be only measured by with MBO data. We need big volume here to understand that's a top of a swing. Okay, that's what I wanted to talk as an recap based on yesterday. Yeah, that's what I wanted to talk with you based on yesterday. And as I said, we want to make money here, guys. We want to make money. My intention is to show you how you can make money. And I'm not a friend of a lot of icebergs along a route, along a price up and down move, because you see we have 200 icebergs here, we have 150 here. We have, look here, that's the next topic in the documentation. We have had a sweep. Let's have a look at a sweep, right? Real life. So we are just the documentation. We will talk about sweep, stop runs, volume spikes, a little bit about absorption. I don't want to waste your time here because maybe you are not new to this stuff. If so, please interrupt me, and we will talk about that. Yeah, Chris, I will come to that in the strategy section. Please be a little bit more patient on that. Look here, when you see a sweep, and a sweep is different from a volume spike, is that a sweep is an algo-driven mechanism. And when you drill in or zoom in into Bookmap, you will see this picture. That's not a bug of Bookmap. It is simply the incoming data. The data comes in so fast that these are milliseconds, simply milliseconds. And what can we conduct out of the sweeps? And by the way, Bookmap is going to add another indicator which measures the sweep. I think they are copying us. I'm really open with that. They are copying us because what they thought are their sweeps, it's maybe not the right approach, so they will add the sweeps to Bookmap as well. And you will see when you zoom in, the sweep started at 90.92 and ended at 46.90. This is a single order ID. Therefore, we don't see sweeps. We don't see sweeps in Apple or in DX feed, for example. It doesn't matter what you use. We don't see sweeps in, oh sure, yeah, that's not good. We don't see sweeps in DX feed or non-MBO data. Therefore, we called the volume spikes, because we can use them in DX feed instruments. We call them volume spikes, because these are volume spikes. I would show you the mechanism behind, because it takes time, and it takes time to trade a certain volume. You know, in Apple we are talking about 70, 90, 100,000 of market shares who are exchanged within 20 seconds in average. We are talking about average amount, average number of shares. So in ES, we have a little bit different world, because this is MBO data, and we can measure based on the order ID sweeps, and we can differentiate and make a difference between sweeps and volume spikes. We can also, if you want, you can tell sweeps are stop runs. I don't mind. We're just trying to find the best terminology for what the market is offering us. So when you zoom in into Bookmap, you see the sweep started somewhere here and goes down. The last order ID, or the order ID, was finished at 46.90. That means this guy or this algorithm which traded the sweep, the algorithm or this guy, his intention was to get 3,000 contracts. So the algorithm is going to the book and seeing what is in the book. How good are the quotes? Do they give me, or can I get 3,000 contracts? And then the algo starts and it goes down in milliseconds. We are talking about milliseconds really here. You see, it's a little bit off. The presentation in Bookmap is a little bit off, but we can learn a lot of this. Because the sweep started at 92. It stopped or what executed at 90. That means 2 points. They needed 2 points to trade a sweep based on the order ID. And he got 1,206 contracts. A means actively, and passively remained 1,794 contracts. And these 1,794 contracts has been traded passively in the book. So that means he got only 1,206, and the remaining he didn't get 1,794, and this 1,794 have been traded passively in the book.
Sorry, Walter. It means that, if I understand correctly, I mean, the A stands for these were the market orders. With the market orders, they gain all the contracts, and P means that with the limit orders,
yes.
They gain the...
Yes.
Oh, okay.
Yes.
I see.
Yes. We see a buy absorption of 1,518. It's not the best example, but let's look at this example here. Let's look at this example in your documentation. Page 49. It's a little bit better. It's a single order ID, as I mentioned before. It's the same one. So if you take, you will see as well a volume spike, but the volume spike has not the same number, because the volume spike in our trading philosophy, it is based on time. So I'm measuring here the time, or I'm giving the volume spike the time to transact 600 or more contracts. And my time is 1 second here. You can put it to 0.1 or 0.5 and see what happens on your chart, or what happens for this specific instrument. So a volume spike is always measured by time, because we need this time. When we are, I don't know whether I have a good example right now live. Let me see that. No, I don't have a good example. Oh yes, here. Maybe here, this one. A volume spike is, we need the time, because, you know, to transact 30,000 contracts, it lasts several seconds. To transact 30,000, 50 or 100,000 contracts. Therefore, we distinguish between,